These bars that you see here, moving up and down, shows us how traders are positioning on Ethereum. Green bars indicate traders going long, expecting Ethereum to move higher, and red bars means they are going short in anticipation of downside. Now take a look at this bar right here, showing us what traders are doing today. This is the most extreme short positioning we've seen since 2022. In other words, a record number of traders are now betting that Ethereum's price is about to significantly decline from here. The last time we saw something similar was in early 2025. If we look at Ethereum, we see that soon after Ethereum declined by 60% as Trump's tariff announcement created a lot of market uncertainty. So in hindsight, those shorts were actually very well timed. If we were to see a similar outcome today, it would send Ethereum all the way back down to around $1,600, generating massive profits for these record short positions. And this isn't the only similarity we're seeing today. This line here shows the supply of Ethereum held by long-term holders. These are investors who have held their tokens for over a year, showing a high degree of conviction in one of the most volatile assets. Over the past few weeks, this group has been selling aggressively, taking their holdings down to less than 40% of Ethereum's total supply. We also saw this type of heavy selling in early 2025, just before Ethereum saw a 60% decline. So today, similar warning signs are flashing for Ethereum that preceded the last big decline. But if we zoom in a little and replace the long-term holder line with this one showing the balance by big Ethereum players, the picture completely changes. These are investors holding between 10,000 and 100,000 tokens, equivalent to roughly $40 million to $400 million worth of Ethereum at today's price. Their total holdings have been going parabolic, reaching a record high of 22 million tokens. What's even more significant is that around 4 million of those tokens, or 20% of their total holdings, were accumulated in just the past 2 months. So on one hand, we're seeing record short positions with long-term holders selling at a fast pace. But at the same time, big Ethereum players are accumulating aggressively. This means two sides of the market are making completely opposite bets today. Our job as traders is to evaluate which side holds the stronger hand to position ourselves on the right side of the market. At Bravo's research, that's exactly what we focus on, identifying high probability trade setups based on macro, fundamentals, and technicals. To assess which side has better odds, we need to figure out who these big Ethereum players actually are in the first place. While there's no official data on it, we think that most of them are through what's called Ethereum treasury companies. These are businesses that hold Ethereum on their balance sheets as part of their long-term investment strategy, similar to how they hold cash, stocks, or even gold. If we look at their Ethereum holdings, it has surged from nearly zero back in June 2025 to over 4 million tokens today. Interestingly, that increase aligns almost perfectly with the 4 million tokens accumulated by large players that we highlighted earlier. These treasury companies have become one of the most important sources of demand for Ethereum because of their size and steady pace of accumulation. As of mid-October 2025, there are around 14 publicly listed Ethereum treasury companies. The largest among them is Bitmine Immersion Technologies, led by Tom Lee. In just the past week alone, Bitmine added more than 200,000 tokens, bringing its total holdings to over 3 million tokens, or 2.7% of Ethereum's total supply. If we look at the chart showing the total supply of Ethereum held by these treasury companies, the growth has been nothing short of exceptional. Back in June 2025, they held less than 0.5% of Ethereum's total supply. Today, that figure has climbed to 3.5%. That's a 7-fold increase in just 4 months. And we think that this accumulation trend is very likely to continue for now. You see, these treasury companies have managed to sustain this level of accumulation without taking on excessive debt. This chart shows the total liabilities of the top 6 Ethereum treasury companies. Despite their aggressive buying, their total debt has actually declined since the start of 2025, falling from $225 million to $190 million. That, of course, doesn't mean every single company has reduced its debt. When we break it down, firms like BitDigital and GameSquare have seen their liabilities rise. but those have been more than offset by debt reductions from the other 4 companies. Now, with what the US central bank is doing, it's going to enable these treasury companies to gain access to cheaper capital, giving them the flexibility to expand their balance sheets again and buy even more Ethereum through leverage. This chart shows the Fed funds rate, which is the benchmark interest rate set by the Federal Reserve that directly influences the cost of borrowing. Falling rates means cheaper borrowing, pushing capital toward risk assets like crypto. And the opposite is also true. We can see this more clearly by putting Ethereum's price on top. Ethereum bottomed and moved higher from December 2018 onwards, right as the Fed announced a rate pause and then moved towards rate cuts. It then peaked in November 2021 when the central bank began raising rates again. And once again, it found a bottom in late 2022 as the Fed signaled that rate hikes were nearing an end. Today, we're once again in an easing cycle. The Fed has already cut rates by 0.5% in the past 2 months, and markets are anticipating one more cut before the end of 2025. This provides the ideal backdrop for Ethereum treasury companies to take on more debt at a cheaper cost to fund their buying operations, one that could easily neutralize all the selling coming from long-term Ethereum holders. Of course, at some point, the tide will turn, as history reminds us that every period of easy money eventually runs its course. The leverage built during times of cheap borrowing always comes with a cost. When that shift happens, the same Ethereum treasury companies driving demand today could become a source of systemic risk, as rising rates with maturing debt forces them to sell their positions. The more leverage they take on in this easy money environment, the greater that risk becomes when conditions reverse. We think that moment will eventually come, but we don't believe we're there yet. For now, this wave of cheaper money continues to act as a tailwind for Ethereum. In the past year alone, we've captured multiple double-digit trades on Ethereum, with gains like 28%, 37%, and even 83%. And for the trades that didn't play out, our losses were limited to around 5%. We also completely sidestepped the recent crypto liquidations, as our risk management framework triggered a sell signal ahead of the event. To follow our exact trading strategy step by step, with real-time buy alerts, sell signals, and portfolio updates, join our community using the link in the description below.